Money laundering. Money laundering is an essential part of every audit. So if it is a new audit or if it is a recurring audit, auditors have to check for any money laundering activities. Now, let's first understand what is money laundering. So money laundering, it is the process whereby the origin of dishonest or illegal obtained money. So for example, if you have obtained money from a drug deal, is concealed so that it appears to come from a legitimate source. So I'm aware that a lot of people have seen this in a lot of movies, but then why is it so important in audit? So let's first understand the money laundering offenses and the money laundering offenses that are particularly on auditors. So first of all, acquiring, control, or use of any criminal property. So of course, if you have some drugs, in that case, that would be a criminal offense. Concealing, disguising, or transferring criminal property or removing it from the country. So for example, drug smuggling. In that case, that is also a criminal offense. Failure to disclose money laundering. So this is where the auditor comes. So for example, if the auditor has identified that there is a money laundering and has kind of disclosed it or hid it, that case the auditor would be charged with money laundering offenses. Tipping off. So tipping off is a really important concept. It's basically if you are aware that there is money laundering and you go to the person who is money laundering and you tell them, well, the police is coming or people are coming to investigate you and you should run away. So you'd be tipping off that person regarding any illegal or money laundering activities that may have been investigated. And finally, failure by the financial services to meet any of their obligations regarding money laundering regulations. So if you fail to do all of the procedures that you need to meet money laundering regulations, in that case, that is also an offense. So for auditors, the last three are basically the offenses that auditors may find themselves in, and they have to be very, very careful when it comes to it. Now, what about the stages of money laundering? So the stages of money laundering, there are 3 stages. So number 1 is placement. So basically, let's just continue with the drug trafficking example. The money that we got from the drug trafficking, we take it and we put it into a bank account. So the moment that we place this dirty money that is from illegal activities into the system, that becomes placement. We are placing it in the system. However, at this point, if someone came and said, oh, where is this money coming from? They would find out that it's from illegal activities. Then comes layering. So this layering is basically the process of taking black money or dirty money and changing it into legal money or sources from legal activities. Now, how is this done? We're going to talk about different examples, but basically, for example, taking it into a lot of complex transaction, taking it from one company to another, from different offshore accounts, for example, that is an example of layering. And finally, integration. This is the process when the money moves back to a legitimate source. So when you use that money after the layering and you buy a house, for example. So once you buy that house is a legitimate asset. And in that case, the money that comes from, example, selling that house is from a legitimate source. So these are the 3 steps of money laundering. So let's look at some typical suspicious transactions. Now, of course, you may have some of these in the exam as a scenario, but some of them are not common, but they are still money laundering transactions. So usually large cash deposits. So whenever there is a huge dump of cash, so that's when there is an indicator, oh, there must be some placement here. So a huge dump of cash, that is an indicator of money laundering. Frequent exchanges of cash into other currencies. So, for example, taking a dollar into pounds, into euros, into yens, into pesos, into dollars again. So, in that case, you're putting it through so many different transactions, layering. And in that case, it's very confusing to really understand where is that money coming from. Overseas business arrangement with no clear business purpose. So, for example, if you open up let's say, a tire shop in a country that you've never been to, and you say that your income is coming from that tire shop that is in that country that you've never been. So that is very suspicious. You haven't been to the country. Why would you really open a tire shop? In that case, that is a suspicious activity that may mean that you are money laundering. Overpayment from several clients with no resolution. So, for example, let's say that you're in the retail business. And in the retail business, you sell clothes, retail. And a customer bought a suit, and that suit cost $100. However, that customer paid $500, and the customer never asked for their money back. In that case, that seems odd. Now, what happens under the background is basically the owner or the person who's committing money laundering gives that person $400 and tells them, can you please pay or overpay buying the suit? And in that case, I get back my $400 through my business, right? And if anyone asks, I've got an invoice that says $500. So in that case, it seems that the money is coming from a legitimate source. And finally, complex business structure with movements of funds. So a lot of shell companies, a lot of transfer from funds, and there's not really a business. So there is no business that actually creates this funds, but there is a movement of funds. So that is also an indicator. So money laundering doesn't always have to involve money. It also can be assets. So the buying and the selling of assets.